Please welcome Mike Dudas.
How you doing?
Hi, Mike. Pleasure to have you on.
Likewise, pleasure to be on. Pardon the massive microphone right in front of my face, but I wanted excellent audio quality today.
That's all right. Where are you joining us from?
So I am at home in Connecticut. It's 100 degrees here, and we are in the we're in the dead of summer.
All right. Oh well, I'm in London. It's been very warm here as well.
Yeah, that's what I heard. I heard it's been like Europe is no air conditioning and unseasonably hot.
Thankfully, I have some air conditioning here, but yes, I've been through it as well. So you recently raised a third fund. I want to talk about that. And
Yeah.
this is like one of the toughest markets. Like, I feel like you've learned something from that. Do you have some tips on how to pull that off?
Yeah, absolutely. So the funding environment, we raised the majority of the fund in 2025 into 2026, and it was night and day from when we raised our last fund, our second fund in 2022. It's very interesting when the market is at its most frothy and exuberant. It tends to be easier to raise money, which should be. I mean, I guess it's intuitive in some sense. Investors are emotional, but it's counterintuitive if you actually want, really high quality returns. And so, we raised over the past year, and it was much more difficult in the last raise. When we raised our second fund, we were much less experienced. Crypto was far less mature, from a product, security, regulatory, and frankly, usability perspective. And despite all that, far more challenging this time as a more experienced team into a better market with a lot more clarity and a lot more usage and a lot more resiliency in the crypto ecosystem. But yeah, we're excited, and at our hearts, we're a crypto fund. It's deep in our DNA, and then like many other crypto funds, we're looking at businesses now that utilize blockchain technology, but perhaps you don't have tokens and things like that. So we're doing a lot more equity investments and really looking for long durational, profitable businesses, just like any traditional VC historically would.
Yeah, Six-Man Ventures has been doubling down on the Solana infrastructure and DePIN. DePIN has gotten a lot of hate. Like, I've been through a lot of interviews where people either were super into it or hated it. What's the dumbest criticism people throw at DePIN projects?
So I think a lot of the criticisms are actually very valid, right? So bootstrapping a network through, a native token. So basically, the idea with DePINs is that you can get a distributed supply base by giving folks a token instead of dollars to contribute to a network. And the criticism that that's a silly model has actually worked out quite well, in the sense that many of these networks, their tokens, haven't been properly cared for, haven't been given structures that will allow them to accrue value and become valuable outside of bootstrapping a network. So once DePINs get to scale, the idea is that the token then should have some other use beyond just bootstrapping demand. Perhaps it captures fees, has governance, etc. And so basically a big criticism has been like, well, why do these even need to have tokens? There are many sort of marketplace businesses in the traditional world, Airbnb, Uber, many others, where people contribute labor or other forms of work and receive dollars, and those work out great. And I think that's been a valid criticism. So the onus is on DePIN projects. I think some are starting to basically use the native token not just to bootstrap demand, but also to provide an equity-like asset, basically through buybacks that represents the value of the profits or revenue generated from the networks. I think some invalid criticisms would be like, well, why aren't any of these businesses at scale, like major scale yet? And I think the reason is just these are some of the hardest businesses to grow and take quite a long time. Marketplace businesses can take a decade or multiple decades to get to any real scale, particularly when you have regulatory roadblocks in front of you. So I think we're going to see over the next cycle, these DePIN businesses, businesses like Helium, that basically have real demand, have real, are offering a real product, whether it's mobile network or others offer bandwidth or AI compute. I think you're going to see some of these businesses start to break out. I think people have had an irrational perception of the time required to build out real businesses, because the time horizon of crypto token holders tends to be less than a year in most cases.
Mm-hmm. Is there a specific crypto consumer product that you use that it's kind of like underrated, that you feel like more people should know about?
Yeah. So the biggest product segment that I'm using now reminds me of the thing that got me most excited about consumer crypto use cases. So in 2020, I think it was 2020, started using NBA Top Shot. I love to collect things. And, basically NBA Top Shot was a digital representation of a basketball card. And they had these things called moments, and they were like a basketball card, but better because they had video. And it was just a really exciting product. So, was really excited by that. That got me into quote unquote, Web3 and NFTs. I think one of the criticisms of crypto is that we've had a lot of products that haven't had, call it, intrinsic value. And so one of the most exciting segments on the consumer side that we're focused on as a fund, is this collectible space. So as an angel investor, I've invested in a company called Baxis that does tokenized liquor, primarily whiskey today. And as a fund, we've invested in a company called Trove that does tokenized cards, so Pokemon, TCG, and sports cards. And there's a number of businesses breaking out in this space: Collector, Courtyard, etc. And I still think they're underloved. You forget the tokens, like not talking about token prices or anything like that, but the number of users and people who realize these things exist compared to the number who basically were speculating on NFTs in the 2020 to 23 era. It's much, much lower. And, I think it can, should, and will be much, much higher, because these are products that people already love. And now, anyone can access them globally with real liquidity at any time. So I really expect the collectible space to grow in a way perhaps that could be, outsized to how large the NFT market got in the last cycle.
Yeah, we've seen a lot of things coming in and out of the industry. We obviously have seen how much prediction markets have picked up recently. Do you think it will be sustainable over time, or is it just will it end up being a trend like we had NFTs and so on?
Yeah. So the two biggest call it new trends or new on-chain trends of the last couple of years have been prediction markets and perps. Really, I would say perps for the most part. Interestingly enough, Polymarket is on chain, Kalshi is not, but on chain use cases, perps and prediction markets have grown really substantially, and they, in my estimation, I think most reasonable people's will continue to grow significantly. And so with prediction markets, largely the majority of the volume for Kalshi, again, which isn't on chain for the most part, is in sports betting, which is just a proven large, high TAM, really exciting segment that people love. And I think with this like sort of return to real world and community, and the World Cup is having the biggest it's ever been, and not only are people going to the games, but they're having watch parties, and you see cities just be absolutely electric around them. I think this is sustainable. And prediction markets give a great way for anybody to access these anywhere, like I said. And then what's interesting about perps is for the first time we have a really novel structure for people to trade a broader range of assets on chain. So one of the biggest challenges with crypto going mainstream historically has been, well, hey, this is fun and we enjoy this trading, but it feels more speculative. Like, where are the real assets? Where are the things that we can invest in? And so, particularly with Hyperliquid, and then you've seen a lot of the centralized exchanges follow, getting into real asset classes like public equities, pre-IPO equities, commodities like oil and gold. We're starting to see real assets with real liquidity be able to be traded on chain, both perps and spot, 24/7, 365. And by the way, it's exciting because these things are sustainable. They already exist, and now we're giving them to both institutions and retail in a better form. And you can see, with the adoption by the traditional financial institutions, the exchanges like ICE, and NASDAQ, the big banks and financial institutions tokenizing and issuing their assets on chain, they're realizing that the blockchain rails that we've built, with the general availability, the transparent ledgers, frictionless movement, it's just better than what they've been offering their customers historically. And if they don't offer these products, they're going to be overtaken by new entrants or by their peers who adopt them sooner. So, I think that things like prediction markets, again, largely expanding the class of sort of speculative or investable, or even to some extent gambling asset moments, and then perps, making currently investable asset classes more investable in many ways. I think those are trends that are absolutely sustainable, and it doesn't take any sort of weird proselytizing or telling a narrative that doesn't exist today for people to wrap their heads around it.
Mm. The joke of like pivot to AI. Everyone's been chasing AI risk capital recently, and my question would be: is crypto VC fundamentally losing the war for attention to AI startups?
So, there's no beating, like, AI at this point is, sort of intelligence is like, yeah, it's sort of the unit that's going to drive, like, it's the thing that will drive, humanity, but like civilization or just like the universe forward. So, to sort of fight artificial intelligence or AGI or any of those things for attention, moving forward would be a silly game, because again, that's the unit that will sort of drive everything forward. So then the question is, given a world where AI and artificial intelligence and building, sort of augmented, building products that build upon what a human as we know them today is capable of, knowing that that's going to happen, what opportunities do you have to build products that lead to a better future? And there's a lot of ways where blockchains can contribute to that. Okay, so one of the obvious ones is the foundation models are centralized. They start out, certainly in the American ones, the sort of frontier models are closed source, and we see all the back and forth between the government and these private companies on what can be made available to businesses, consumers, and the government. So there's obviously an opportunity here, and you see some emerging efforts, with BitTensor, with Hermes. You see some many distributed AI products and projects starting to grow and starting to see real adoption, Venice, etc. So, one, I think, you have this, just like crypto has always been, hey, Bitcoin is something against centralized money. Ethereum is the distributed computer, an alternative to centralized tech. Now you have the alternative potentially to centralized intelligence. So, I think that's one area. Then you have, Venice, again, focused on privacy. So shielded usage of inference and training and other types of AI development. Blockchains are fantastic for provenance. So in a world where, we have just an explosion of, what's true, what's not, what's human, what's not, I think blockchain provenance, can increasingly matter. And then another area is obviously, these are fantastic rails for transacting. And, I won't go too deep into it in this chat, but this notion of, agentic payments, I think you're certainly starting it with like metered API payments and things of that nature, so that agents can access products is something that will be useful. Now, that's not to say that crypto startups will accrue, immense amounts of value or enterprise value from these products, but they're extremely useful to society, and I think are going to have play a large part in making the broader public realize that blockchains are fantastically valuable technology, and frankly maybe move past some of the prior criticisms of crypto being purely speculative.
Yeah. Is there any founder in Web3 that you think is underrated?
So there are a number. There's a lot of quiet founders, in Web3. And, or honestly, I don't love Web3 as a term anymore. I just think, sort of like crypto and blockchain.
Yeah, same.
Yeah. So I think I'll give you just one sector.
Okay.
DeFi to me is a little bit quote unquote out of favor, or undercovered relative to I think how much impact it's having and will continue to have on the world. So, the notion that somebody in Colombia or somebody in Bolivia, has the ability to hold their assets in dollars and perhaps earn, almost like treasury like yield on their assets is just a incredible, continues to be an incredible idea. We have a founder in our portfolio, Aya Kantarovich, who runs a company called August Financial. And she's fantastic. I wouldn't say she's like loud or brash, but she's out there building incredible financial products, vaults that allow people to earn yield on their balances, and then their products are composable with a number of different front ends, DeFi apps that consumers or businesses can connect to. And I think that's a lot of the there are a number of founders like that working on the products that aren't loud, that aren't shouting, but that are onboarding, in sometimes small dollar increments, many folks into, utilizing the properties of blockchain that are better than traditional financial institutions.
Yeah, I mean, you mentioned DeFi and like what you don't like Web3 and it's you prefer crypto. I've heard some people saying, and I tend to agree, but perhaps because I went to some fintech events as well, I feel like crypto to some extent, most of it is just fintech if you think about it.
Yep. And I don't think that's a surprise. Like in hindsight, the fact that we're using, these, these are like a blockchain is effectively like a global distributed, permissionless or consensus-based ledger. And what would you use those for? It would obviously, for the most part, be for sort of financial activity, right? Tracking the movement, the settlement, the size of financial denominated instruments, and so that's what's happening. And I don't think that's a knock on crypto. I mean, these are incredibly large TAM markets, and it's probably really good for the industry and frankly for the population at large that we're starting to use them now to augment, complement, and improve things that humans have been doing for many centuries, rather than trying to invent, call it new schemes to separate people from their money.
Yeah, I mean, technology tends to change things. There's a lot of development technology happening at once in all these different sectors, and it feels like at any moment things could flip. Do you have any expectation? I don't mean in terms of timeline, but is there something that you're keeping an eye on for a potential flip of a turn of events?
Yeah, so I think you're probably referring to like token prices. So in terms of like the actual usage of blockchains, there was a report that came out today, just showing that Solana on number of traders, on volume, on actives, hit all-time highs in Q2. And that's happening across a number of different use cases. It's not just the meme coin speculative use case that was the primary driver in 2024 and 2025. That's exciting. You saw the Robinhood chain announcement this week, which connects to Ethereum, and a lot of the leading, EVM or Ethereum ecosystem protocols are going to be working with Robinhood to give, 100 million plus users, access to fantastic on-chain financial services. So the usage metrics are both there and growing, and that's really exciting. Where I think we're lagging, obviously, is on the token prices themselves. And I view this for the first time as a situation where like people are looking at tokens and they're just saying like, is there a fund? So forget Bitcoin, which is thought of
Yeah,
as more of a store of value and a non-sovereign money and is valued in its own way. It's very flow based, et cetera. But looking at things like Ethereum, like Solana, like Hyperliquid, people are now increasingly saying, what scale do these blockchains need to get to of usage and fee paying by applications and users on top of them for them to justify their token prices? And I think we're in a healthy environment now. It just took a re-rating. Like Ethereum has gone sideways for 5+ years. I think Solana has as well. And I think we're now at a point where you could start to make a valuation-based case that if there is an expansion, for example, in Solana in terms of priority fees and priority transactions that people are willing to pay for, that there is potentially like a rational way that you could now value that token and these blockchains and the activity. And then same thing for the apps on top of the chains. We've gone through a very vocal and loud period of time for the last year and a half where people have been saying, hey, enough of these tokens that have no value to them. Basically, if I'm going to hold a token, particularly if there's somebody who holds equity in this business, I want to see you direct value to that token. And you're seeing, for example, Hyperliquid does that. Aerodrome, our portfolio company Pump does that in really large size. And it's increasingly becoming the norm. And I think that's a good thing. Now, it's not going to be, there are going to be, I believe, companies that have valuable dual, equity and token structure, but the for the quote unquote crypto market to come back, you're going to need high quality tokens, high quality assets at the same time. So I believe that's starting to happen. You're starting to see over the last few weeks some shoots of tokens that do accrue value increasing in price more rapidly than some of the ones that don't. Do I have visibility into exactly what's going to happen and whether we're going to go back lower over the next 3-4 months? I don't. A lot of that depends on macro, depends on elections, depends on the Clarity Act passing in America. But it does feel like the market participants have a set of expectations that even if we go lower, things are getting healthier, and we can see a path forward to a 2-3 year period of not only valuable protocols that people use being on chain, but the tokens associated with them being justifiably valuable.
I see like a mild pickup. I wouldn't call it a trend, but I've seen here and there different people mentioning sort of like a mild demand for a new structure for crypto investments. Have you seen this? What do you think about it? Do you think we need a new structure?
So, we're investors in a project called MetaDAO, which has this concept of ownership tokens, where the token holders effectively have, all of the governance over the project, and where the founders themselves, only earn tokens if the overall, if the token price goes up. I think that's an interesting and evolving model. Is it perfect today? No, but is it a step in the right direction? This notion of an ownership token, I do believe it is. It's not going to be right for everyone. Startups can take many, many years to develop. They often do require, quiet, patient capital. And I think crypto's gotten into trouble in the past by having too many projects that tried to be, like an Ethereum or Bitcoin, where they just launched the token as soon as possible and then tried to, build something out of the token goodwill. And you just can't replay some of those sort of, certainly the Bitcoin immaculate conception type thing, and Ethereum being sort of the first smart contract chain of real substance and belief. So what I think we're moving towards is, one, crypto projects that are companies that don't need tokens, not launching them. I think that's really healthy because there are significant fees being paid and generating on chain, similarly to how they are in traditional financial markets. And that's a good thing. So you have equity-based companies. And then, like I said, earlier, many tokens that are being launched or that have been in market are either launched with or transitioning to value accrual structures. And that's a really positive thing. In terms of new deals that are getting done, I do think, I know for a fact, we're seeing more equity specific and equity only deals where, there's not necessarily a token warrant like there would have been in the past, or where the token warrant looks a little bit different. And you're thinking of it as perhaps resembling tokenized equity in the future, rather than a token with a different design, a foundation, and a different structure. So, I think we're moving more towards closer to norms that you see in traditional private funding markets outside of crypto.
Do you think something new will emerge, given we've talked about like AI, crypto, like the crossover? Do you think a new category could emerge from that? Or it's just going to be two different tools, sort of like plug and play?
Yeah, I just think they're super complementary. I don't know what you mean by a new category. I mean, I think there will be, I described some of the ways that I think, blockchains are complementary to AI and can actually add value. I think there will be, for example, I think the compute asset class, like you'll probably have things like compute derivatives. I think those things might naturally evolve on chain. You'll have, new means and methods of financing, capex. Things like USDAI to finance GPU purchases.
Hmm.
And so, I think back to what you had said earlier about, hey, this is just financial markets. I think crypto rails have, and blockchain rails, and the markets and participants around them have the potential to, be the place where markets for many things in AI do develop at the edge. And I'm excited about that.
Yeah. One concern that comes to mind for me with crypto is I went to these fintech events, and it seems to me that the trend, like if you talk long enough with a CPO product person, it seems like their way to go about it, these larger, like well established companies, is to first partner with a company that seems trustworthy and well established in crypto, and then copy their model and then build it in house. And if this trend goes on for long enough, that means that these products have, like there's a timeline. Does this concern you?
No. So there are companies that are, built to service, institutions and large enterprises, right? You have stablecoin, infrastructure companies, you have DeFi infrastructure companies, but there is a long, track record of, big net new companies being built. We talked about some of the categories, like Hyperliquid is a net new company, and the traditional financial institutions are coming to them to list markets on their protocol. So that's a net new company. They're bringing those companies to them. Similar with like Kalshi and Polymarket. Hey, sure, they use some of the larger financial institutions in some cases for distribution, Polymarket, and Kalshi, but they themselves are some of the most used websites and apps in the world. So they're I think it kind of goes both ways, right? They're growing their cash flows, their liquidity, their depth, through partnership with large technology and front ends. But at the same time, they're accruing significant, tremendous value that gives them the ability to disrupt those incumbents. And so, those, I'm just using those as the two largest examples. And I think you'll
Yeah.
see many more where native companies do succeed. At the same time, unequivocally, you will have, crypto companies in service of large financial institutions, tech companies, and others who want to offer blockchain enabled services.
You guys invested on Pump Fund, and
Yep.
they've been doing great. They're more of a consumer product. Consumer crypto hasn't been, like doing as well as in um, previous year, like last year. Does that concern you? Because in crypto, I feel like anything could be a trend. Like anything could have like a timeline, and anything could feel like this is the best thing ever, best investment ever, and then all of a sudden, couple years in, and it sort of like starts dying out. Genuinely, like, does that concern you? Do you think, if anything, they can pivot to something else? Like, what's your mental mindset around it?
Yeah. So the mental model, like for Pump specifically, was always, when we funded it, it was pre-revenue. And the idea was, anyone can launch a token. The tokens, the form that took in 2024, 2025, ended up being almost entirely meme coins. And that was very much symptomatic of what the market was desiring at that particular time. We had seen NFTs the previous cycle. NFTs weren't as liquid, they were higher barrier to entry. Meme coins were just like tokenized attention, just at the smallest denomination. And it just grew into something really, really large. But it's not, necessarily pat the pen that that's the end state, and that's not what Pump's end state is. It continues to be. They've introduced a program where companies can launch a token and then have that token convert into a portion of equity in the company. They've launched and continue to develop their creator streaming program where creators can earn fees for launching tokens. In their mobile app, they've launched cross-chain. They've added assets, outside of meme coins. And so they're really focused on encouraging folks moving forward, not only to launch memes, but to launch tokens of other types. By the way, while all of that is happening, they're still doing $1 million in revenue a day on what is primarily meme coins, at the bottom of the market. So I think it bodes well that if they continue to develop, they will become the de facto go-to place for people to launch tokens of all types. Look, I'm incredibly biased as an investor, but there's the potential. Is it a given? Absolutely not. They have to earn that right. There are other fantastic companies that have token launch pads that have good consumer-facing apps for people to trade. But as the quality of assets increase, Pump has a tremendous amount of attention, a number of users of their applications, and is adding token types and cross-chain, and should help them grow. In addition to the entirety of the rest of the market growing, we've seen a number of other consumer trading apps launch. They're adding tokens of all types. You've seen this in the Hyperliquid ecosystem, and crypto is just so cyclical. It is sentiment. You can start to feel it change this summer, and it's going to change. And people are going to go from the people who were trading memes and crypto tokens a couple of years ago, or trading memory stocks and all kinds of AI stuff right now. A lot of it memetically, and at some point, a lot of those things are going to top, or they're going to lose money, and they're going to sort of filter back into, I think, risk areas and fun areas of crypto.
Mike, I know you have a hard stop. Thank you so much for joining me today. It's been very insightful. It's always good to chat with you. Thank you.
All right. Take care.